Hello and welcome to Pro Trader Strategies market commentary for Tuesday, February the 6th, the day after the February 5th flash crash of 2018. Actually, it was a pretty big move in the Dow, down 1,500. It was the single largest move intraday in the Dow history. That is by points, that is not by percentage. Percentage is still the 1987 crash, but it was still a major move yesterday and pretty much out of the blue. Caught a lot of people by surprise. Great time to put on those SPY puts, I have to say, and my XOM puts that are not working out too well. But anyway, let me get a couple of things out of the way. My name's Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can implement into your portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. And please remember that past performance of any trading system or methodology is not necessarily indicative of future results. All right, having all that out of the way, let's get it on with some economic data. And I'm going to talk about a little bit about what happened yesterday. The economic data across the pond, really not so much. We did get factory orders out of Great Britain month over month, came in at 3.8%, expected to be 0.6%. So quite a lot larger than expected there. That's good for the overall economy. That means people are buying from manufacturers, moving inventory, increasing margins and things of that nature for these companies, and that means that the consumer is buying. Then here in the United States, not so much other than Jolt's job opening, which I don't even really look at, came in at 5.81 million, expected to be 5.95 million. And last month's number was revised up from 5.88 million to 5.98 million. So a 100,000 increase there is pretty much going to offset the 100,000 decrease than expected this month. So overall, not too bad for a data point that really isn't that great. It kind of will give you a little bit of insight as to what's going on with the non-farm payrolls. But on to the overall markets. Let's talk about the crude oil is down below $64 a barrel after yesterday's big sell-off. We talked about this. Once it got back into this trend channel, it was going to have a tough time breaking out of it. Didn't even try yesterday for the most part. It made a blip to the upside and then all out sell-off across the board in just about every market except for the bonds and some of the safe havens. And the reason why is because the Dow was having, or the equities were having a bit of a fit with increased interest rates. They kind of want to send a signal to the Fed that it might be time to start laying off on interest rate increases as much as the Fed was expected to increase interest rates. So, I got in a big argument with somebody on social media about just that the markets, he was saying that the markets are just, selling off because of the algos and stuff like that. And I said that, it really has to do with the markets speak to us. Despite the fact that there's algos in there these days, the markets do speak to us and tell us, what it's feeling in a sense. It's kind of like talking to a dog, I guess, that it's just barking at you. Maybe it wants food or go outside, but it's trying to tell you something. And that's the way I see what is happening yesterday in the overall markets. The market's really trying to signal to the powers that be that it is not happy, whether it is with this memo, whether it is with the increased interest rates and things of that nature, just things that are going on. It's not real happy right now. So I think that was really what the equities were trying to signal yesterday. Gold was up yesterday, basically a safe haven, right? As the equities are free falling, people are pulling their money out of equities and looking for someplace safe to park their money. That's what was happening in bonds and in gold. As you can see, gold was up yesterday, but giving back some of those gains today as the equities are trying to rebound. Now, this is getting kind of ugly with Bitcoin futures, as you can see, there is just almost no upside to any of this. This is just a very bearish trend. As you can see, we even broke below 6,000 overnight. Overall market's just pretty ugly in here, despite the fact that we have had a 1,000-point rally from that to only be down about 100. It did even go up and test unchanged, but this market is just not looking very healthy for the most part. You would think that some people would have been going to rush to the Bitcoin as a safe haven for currency, but that didn't happen yesterday. It continued to slide as well as people were pulling their money out of just about everywhere. Bonds had a massive rally yesterday, as you can see here, on that tank in the equities, but today giving it back a little bit of that ground. I didn't do any TLT or any of the TBT that I was talking about yesterday. Just kind of took my hands off the wheel for a little while. This is the VIX. You can see the VIX this morning. This is this morning's chart of the VIX trading up into the 50s. Now, you can see the last time we saw that was back in August of, 2016 was the last time we saw the VIX that high. Before that, we have to go back to 2012, and it didn't even reach the 50s. Really, the last time that it was up there in those 50s. Don't have a chart for it here. I can probably do a customized list real quick. And let's try and throw something up there. 15-year, 1 day. That's what I actually want. Let's add that time frame. So actually cancel. Let me just say apply. Okay. So this is on that 15 years. So you scroll back. This is that 50 spike that we saw already. This is the cluster that we saw in 2012. And we can kind of continue to scroll. It's going to get a little wanky here, but you can see the high was in 2009 of 80. But after that, we didn't even reach 50 a couple of times thereafter. So pretty crazy move in the VIX. A lot of high implied volatility. I got to try and find something to do. Haven't done anything yet. Probably going to be looking at the ETFs for the most part and save some powder for the earnings that we have coming out. We have a lot of earnings coming out as well. NASDAQ up 130 some points, back into this trend. You know, yesterday I talked about this, got into the trend area, thought it would come down and test this bottom trend channel sometime in the near future, but I didn't think it was going to be yesterday, and that's what happened. Blasted and settled below that trend right there at the value area high, which is going to act as support. You can see it did it again today. This trend channel on the bottom level is going to act as resistance for this to get through. We've got to get through that and settle up in there for it to be anything really meaningful that we've gotten back into that trend anyway, trend channel. Then we've got the E-mini S&P is up about 45 points. Market's really starting to take off actually even since I just started this webinar, but the E-mini S&P is moving up by about 48 points. Did I even show the Dow chart? I'll have to try and find that real quick. You can see we're just making that move right now. Did trade to the highs of the day right on the open. Looked like we were trying to make a move, kind of consolidated down, but hopefully we can make a bit more of a move to the upside here so I can throw on some long deltas by selling some puts and some ETFs is really what I want to kind of do. Let me try and find that Dow chart because I don't think I ran over that one quite yet. Dow Jones up about 164 points, trying to make that way back. But you can see here, this is that bottom. When we were down here, it was down about 1,500 points, and then rallied back about 500, just slightly above that opening with 160 points in the Dow Jones. But who's counting 100 points here and there? Anyway, E-mini S&Ps we've already looked at. Let's look at a couple of things that I'm going to be looking at for earnings. I haven't done anything like I said today. Could still be looking at TLT and a couple of those other ETFs, so stay tuned for that. Snap, I'm not going to play this. I don't like stocks that consistently lose money. So I'm going to stay away from Snap, but they are having earnings coming out. Then Disney. Disney had a big move, tested this value area low, came back. I'm going to be looking to play this to the upside, most likely. I think a lot of people are still going to Disney. As a matter of fact, I have a friend there right now, so I'm going to play it to the upside. With Chipotle, I don't know if they're past all their woes yet. I haven't seen like lines out the door like we used to see in Chipotle, but I might throw something at this because it's got really excessively high implied volatility. So I just feel like I have to play some of these that have the high implied volatility. We also have Gilead coming out. Exelon is coming out tomorrow. And I actually haven't ever traded this, but somebody brought this up in one of the webinars to look at trading, and it, generally speaking, has pretty decent options. So I might be looking at this stock a little bit more in detail for this earnings as well. So that's about it for today. Haven't, like I said, added anything as of right now. I'm kind of waiting for some of this dust to settle to start putting some of this stuff on. But when there's blood in the water, and we have on my watch list alone probably 30 stocks that are above 100 or in the 100% IV level, that is the time we just have to take advantage of it. And a lot of those have had earnings, and many of them are ETFs. XLF, XLE, XLK, XLI, all 100% IV percent, or 100 IV percents on those. XLP 99. So a lot of those I just have to jump in there. XLV is trading around 96. So some great opportunities for ETFs as far as I'm concerned, that I'm going to have to throw some stuff on there. Maybe go a little bit smaller tranche than my normal tranche size. So maybe half of that is where I'm going to start stepping into the water. Okay, so Friday's webinar is going to be on synthetic shorts. So if we're seeing this turn into a bearish trend, this is going to be a great time to start implementing short strategies around stocks. So synthetic shorts, you don't have to borrow the stock. You don't have to go out there and pay dividends when you're doing this. This is going to be a very clean way to trade a short position in an underlying, in dollar for dollar to the downside. All right, I'm going to show you how to set it up for increased probability of success, and when and where is the right environment to set these up. Okay, so if you can't take that, take it easy.